Very well. Hello, everyone. Hello from New York, the Big Apple. Hope everything is good and hope you had a great weekend. I surely had, I have to say that. And welcome to the new session of the FS Street Tokyo Open Trading Room Special Edition from New York for the New York Traders Expo that I started yesterday. As you know, tomorrow I'll have a speech. I'm gladly going to represent FX Street, and very happy to be here and start with you now a new session of um, today's Tokyo Open. So hello everyone. We have Will, Lucas, Pantelis, Sai Pantelis, Jax. We have Desi, and what I'll do, I'll wait for a couple of minutes here, and then we are going to start. It's going to be a lot of fun today. As you've seen here, the FS Street Tokyo Open Trading Room as as a new page today, only for the occasion. This is a daily show from Sunday to Thursday, 8 to 9 p.m. EST, with me, Giuseppe Basile, also known as the FibStalker. And as you know, I stalk price using Fibonacci. I do not stalk people. I just stalk price. Okay, I'm only interested in that. All right. So this is my joke I do all the time. It's simple, but it works. And hello, Jax. Uh, Hi, Todd. Happy New Week, Peter, and to all of you. So let's get into this, and what I'll do, I'll actually switch here to myself for just a moment here. Hello, everyone. Hope you are okay and everything is good. I'm here from the new setting only for today, and I want to say good evening, good morning, and good afternoon to everyone. I want to wish you a great new week, and we'll go and look at the opportunities we have for this week. Okay, so before we proceed, let me remind you this is a daily show from 8 to 9 p.m. EST, and and it features real trading at the very heart of the Asian session with me, FibStalker. And you know that I take risky very seriously. I believe that traders' job number one is to mine risk. And trading Forex and its derivatives, futures options, and CFDs and other instruments with retail off-exchange transactions involve substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you because it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Please also review FS Street risk disclosure on the website. The information that I gladly provide to you include the commentary and trade ideas provided in this webinar should not be relied upon as substitute of an extensive independent research which should be performed before making your investment decisions. All the information I give you, the material is for your general information as well as educational purposes. Very happy if you paper trade these opportunities. I, Giuseppe Basile, FibStalker Consulting Incorporated and FS Street will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. All right, so welcome everyone. Welcome to this session of the Forex FS Street Tokyo Open Trading Room. I see it was good to wait a little bit. I see Joe, Jax, Pantelis, Todd, Peter, FX Ambassador, and I am in New York. Yes, FX Ambassador. What would be your new motto? I don't stalk people, just price. That would be my new motto. Your new motto. It was my old motto, indeed. already Jax. Hello everyone. Hello Peter. Welcome to this session here. I just want to share a couple of useful information for you if you are interested. And we have want to show some of well, I want to show some information here related to tomorrow Traders Expo, and there is an opportunity also for you if you are not able to make it here. There is an opportunity to share and watch some of the material here. Let me just share this with you. I want to share. I have a lot of stuff on my laptop, so bear with me one moment here because I'm not able to. Here we go. I want to share this one. This is the main page of the Traders Expo, and this is one of the largest events in the world related to trading, as you know. And I'll have a speech tomorrow, and you can see me there in the in the slide. And I just want to show that this is going to be on the two parts, this presentation: modeling modern algorithms, as well as I'm going to present the FibStalker console for automated execution. Now, as most of you, I suppose, will not be able to make it in here in New York, I wanted to share the fact that the Traders Expo actually has a virtual event as well. And let me share the link here. So maybe if you have time and if you want, you can do this at your own time. This is the event. And yes, I'm in my hotel room. Hello, everyone. Tonight I'm going to do it from here before going out here in Manhattan. I'm very close to the Square Madison Stadium here, where the Knicks play. And actually, I also discovered that tomorrow the Toronto Raptors are playing the Knicks. So, I mean, I will not be here. Anyway, I shared the page there. That's something that can be interesting for you if you want to be there. There is the event is going to be available in the virtual Traders Expo as well. So that's something that can be of interest, I hope. So, of course, we're here not to talk about the Traders Expo or my presentation, but we are here to look at the markets. So let's dive into the markets and let's see what they're going to bring us, or they brought us last week, as I'm going to review some of the setups as well. I was not very active last week because I was preparing for the event tomorrow. That is obviously more important at this stage, but I'm pretty happy with the results I had so far since the beginning of the year. And as I'll demonstrate and maybe show later on, I also at the end of the show, I'm going to show some of the performance I had on one of my accounts, and I try to put myself in the same situation as the benchmark I'm following, and I'm going to show you my results later on. So stay with me till the end. I'm going to show some of the results, and now let's jump into the charts here. All right, so you should be able to see the charts here on the screen, and give me a yes if that's the case. Let me double check here. Should be able to see the charts, and let's start discussing. discussing them. Okay, so let's start from the euro Canadian dollar. We know this market is correcting lower, and it apparently has found resistance, as confirmed from the action we had on Friday. This market is not trading levels that are visible on the daily here, but it's trading levels that are visible intraday, and this level is likely to be a resistance level here. So let's go and look at the 4-hour time frame, because this could give us a better view of what is the level that this market has traded. And this market is trading in extensions, and this could be one of the levels that has traded. So if that's the case, this market is going to push lower, possibly into again into, or for the first time, actually I should say, into that 150.71 and even lower. Okay, so if you're short in this market since Friday, there's no reason to believe that this market is going to move higher. Okay, this market is possibly going to correct into 150.71. Okay, that's what this market is giving. Just price is telling us, without looking at anything else in terms of correlation, market correlations. Okay, so euro dollar, this is very interesting market. We saw last week participation from longs, and we saw participation, if you remember, from a level that we have indicated on the daily time frame, and we knew that level in advance, and that level was tested twice last week. The level was 110 and is 110.88. As you can see, there was participation once on Thursday, and then again on Friday, and that the market gave two risk-free trades. The first one was stopped out at break-even. The second one was given, and now the market is correcting again into the level. We will need to see whether this market will respect the 110.77 level here, or if this market is going to correct to the lower level, 109.60. Okay, so we are looking. So this is the projection for this week. We either see a bounce into higher level, or we actually see a continuation lower. But in both cases, we tested this level without money at risk, only spending we did it only spending the our cost of doing trading in a way. All right, so I'm sure that some of the students I have, and some of you as well, that are now following me since a few weeks here on the room, have taken advantage of those opportunities, because that's the kind of trading that we like doing, which is basically maximizing the opportunities with risk-free trades. And I already introduced the concept of risk-free trades. And let me stress that that concept again. I mean, trading has to be done in a way that minimizes risk. There are several risk parachutes that I personally try to put in place, and have the people who trade with me have in place as well. And one of these is called risk-free trades. And risk-free trades is something that people who are focusing on gains do not like a lot. People who focus on gains do not want to try to bring to target only half of their initial position. And this, to me, it's a sign of weakness. It's not a sign of strength. It's not a sign of macho trading. It's rather a sign of not respecting enough the markets in order to adopt as a standard behavior for risk management the risk-free approach. Okay, so just wanted to stress that it's always that you look in my eyes when I see these kind of things, because these kind of things are very, very important. And I actually give a lot of importance to them, and I value them a lot. So it doesn't matter to me if this market do not agree with the initial participation, because we possibly not never know exactly what the market is going to do. So the best way to trade this market is to trade the market in a very defensive stance, and that's what we always try to have. Right. So to me, again, it's the same situation as always say. I mean, I don't care if this market now stop or move lower or stop me out, because when you have a free risk trade, the market can do anything. Okay, and the market has always two possibilities: either it moves lower or it moves higher, right? And if it moves lower and it breaks this 110.07 here, we're going to see 109.60 almost surely. But this market could also continue higher, and then we have two levels there, 115, and the target is going to be between 115.19 and 115.75. If you stay with me in the coming days, I'm going to tell you which is that target if the market gets there. All right. So US dollar, Canadian dollar. I'm going to review all the markets that I follow, the main markets I follow, those that I follow the most, because they are technical. And US dollar, Canadian dollar on Friday also gave another update, although at some point during the day there was a sell here, and so this market is still offering the possibility for a continuation higher. It retested this level for the second time with a higher low. So I have no reasons at this stage to believe that this market could not deliver what it has promised, which is a significant move higher. Okay, so if this market is going to come during the week to trade into the 137.50, I'm going to take that if I'll be able to do that. But that could be tomorrow. So tomorrow, excuse me, tomorrow for sure, and tonight for sure, I'm not going to trade. I will start my nightly sessions also with my students at 2 a.m. Tuesday morning. Not tomorrow, not tonight. Tonight I'll need to, I'll just rest and prepare for tomorrow's speech. So this market has still the possibility to continue higher. The Euro Australian dollar, as you know, has the same setups and same shape and form of the euro versus the Canadian dollar, with the difference that this market is much more bearish for the fact that above these highs, 165 here, there has been participation from the weeklies and the daily. The weeklies long have not sustained this price. So this price also is correcting lower, is correcting from an extension as well, and that extension is not visible again on the daily time frame. We need to go to the 4 hours, but this market is actually finally correcting, or going to correct very, very probably to the next level here. Okay, so and so that's where we're going to see this market moving. All right, so I don't know if there are any questions there so far. I just want to review Hi Mishari, beautiful demand level. I'm not sure exactly which level, but if there was the euro dollar, I agree with you. Kairm is asking, do you follow Australian dollar, US dollar? I do, Kairm. That's one of the volume market, as you can see here. This is one of the high volume and technical markets I follow at the moment. We are going to review that market. Before we get into that, let me review the US dollar Japanese yen that apparently seems to be reacting now once price got into this low, and we will see whether this market wants to give us the one of the anticipated levels that we have. We know that this market eventually is going to revisit 170. That's the level that we gave there. And if you want to learn why we are giving that level, my suggestion is that you review some of the sessions that we had before. You find all the sessions of the Forex FX Street Tokyo Open Trading Room online, and you will have them forever. So if you are unsure whether you want to follow or not, look at our previous sessions as well as some of our successes as well, like the US dollar Japanese yen trade that we took at 121 into 114.80. That was one of our trades there. Now, it is my belief that this market has the potential to retrace all the way into 116.36, and I mentioned it's also second level where this market could retest, believe it or not, because if this market does not have participation on the downside, it's going to move to the upside. And there are only two levels that are the next short for me. One is the 116.36 and the other one is the 118.40 level. Okay, so I don't know if this move that looks to be started here could be a move that brings price into those levels, but I'm very positive of the fact that once we get one of the two levels, which we are going to time using the FibStalker timing, that this market is going to eventually to reverse. And the reason for that is that this market has no support from the weekly participants and algorithms at this stage, and so the upside potential is very, very limited for this market. All right, so we just, and maybe we started their move this week. I'm not sure about it, and as you know, I'm never sure about the levels. In fact, I test each and every of these levels. I never trade them dry, I would say. I always trade them after I get some sort of confirmation using a proprietary technique which is called FibStalker timing. That gives us very clear level of involvement and whether the market, so in this specific case, the way I'm going to play this is that if and when the market gets into this level, and only if it gets into one of these levels, I will apply the FibStalker timing and study the sequence of measured move on the smaller time frame as the market gets into this level. And if the participation short will come into the price of this instrument and will push the level below a level that identify the break of that sequence higher, that's an indication for me to get involved. Okay, and it's an indication for me to get involved with low risk. It's a very important area that has a very high probability of giving me a risk-free trade, and that's the whole concept and objective. So the market here, the KIRM, I mean, I'm going to review the Australian dollar US dollar using my method. Now, this market has been trading in extension short. This 50% that you see here, the 71.80 level, it's a weekly extension short. It's the third one in the sequence, and we saw participation on the short side. And this participation seemed to be strong enough to break the back of the bulls here, as we saw 069 and 83 being pierced on the downside. And this market came into play again. It's not very technical, so at this stage I will stay away from it, because this market, although as pierced as although the dailies, the daily short are in control, this market has not followed up here a number of times. He traded this level once, went down, went to test it again, then it came down, and then there's this strong participation on the upside. When I see this kind of action, I stay away. I want nice market that, once they trade, they start moving lower like this, they start moving lower like this, or, this market has given in the past a lot of good opportunity, and it always has followed up. So he gave a foolish trade and then followed up, right? When he gives a setup and does not follow up, I stay away from it. And it's okay to stay away from a market, 1 week, because there are always a lot of opportunities in this market. So Australian dollar, Japanese yen here. This market is trapped. Now, this market is, as I mentioned in the past, this market is in a weekly long, and it's a very similar situation as the New Zealand dollar, US dollar, New Zealand dollar market. And let me show you why. Because Australian dollar, Japanese yen, sorry, here we go. Because this market on the weekly time frame has a strong support, and you cannot discard that support. And I use this example also to explain the concept of path of least resistance last week. If you see a short, but then when you zoom out in the market, you see that there was participation on the long side. You don't wanna be trading the market on the short side, as you can see here. Participation once and 80-20, and then again at that level after the market was pushed lower by bears. So bears have tried to push this market lower. Were they successful? No, because this was an area of strong potential participation higher from the weeklies. So that's the reason why this market has continued moving higher. So if I had to choose whether I want to trade this market, when I want to trade the shorts that actually have found participation here, and the longs, I would always prefer the longs, because the longs, this market is on top of a weekly area, and as you can see here, the longs have traded on Friday as well. Similar trade as the euro dollar. They've traded on Friday, and they're now continuing higher. So if you're long this market from Friday, we want to bring this price into 83.52. Okay, there'll be some resistance at previous highs here, but after that 83.50 level here becomes an area of potential of targets there. Okay. Is there any way to make the screen sharper? It's out of focus. I wouldn't have that, and the reason is that when I'm at home, I use the other monitors I have in here. I'm not sure whether it depends on the fact that I have the laptop, but here Craig is coming for help. You just go to the settings of the video and increase it to 720 points, Judy. Thanks for joining in, by the way. So we have Pantelis, Todd, Joe, Jax, Will, Lucas, Desi, Rudo. Hi, Rudo. Thanks for coming back and for coming in, I should say. Mishari, Peter, FX Ambassador, Jax, Pankai. Hello, Pankai. And we have Todd, Greg, Kairm, Judy, and it's I hope that that helps actually. Okay, so Todd is asking for New Zealand dollar, US dollar. Let me complete the review of this market, and then we will get into it. As you can see here, the Australian dollar, Japanese yen is following up on that long, and it's not nice seeing this market moving and knowing that you cannot trade them. Indeed, as I mentioned last week, in the last few days of last week, been very, very busy trying to complete the presentation and finalize Also, the theme of the FibStalker console I'm going to give tomorrow at the New York Traders Expo. So it's a little bit painful to see this market moving and you are not in, but I know that the opportunities will keep flowing, so I'm not worried about that. I'm not worried, but I just, it's just not nice seeing something like that. So someone has asked the New Zealand, the US dollar. Let's do the review now. As I mentioned before, when I was talking about the Australian dollar, Japanese yen, I mentioned that market was very similar to the New Zealand dollar market, and you now understand probably why, because if you don't have an habit of reviewing the markets starting from the weekly, even if you trade the 1 minute or the 50 minute or the 1 hour or the 15 minutes or the 5 minutes, you should really always start from the weekly. And when we start from the weekly here in this market, what do we see? We see a market that has traded 0670 level twice, and that shows participation. That's where this market is going. This market is not certainly not going lower, as we proceed here. So when we look at the smaller time frame, we also know that once that market found participation last month on January 20 here, and we saw this market move higher, we also know that very often then this market comes to give us another entry, and that entry came last week. It was Tuesday last week with a confirmation on Wednesday. And as I mentioned, even though we saw on Friday that throwback, that scary throwback, see, this is when you want to have a free risk approach embedded in your trading, because once you get a free risk trade here, and I have a bunch of students that have taken that trade, once you have that trade risk free, you can forget about this trade and sleep well and do whatever you have to do, and actually spend your time to find other opportunities in the market, because you don't have to worry if this market trades against you. At some point, this was a full red bar here, and people who do not use a free risk approach are scared about this, because now they have to take a decision whether maybe they are even losing money now because they enter a little bit higher, and they have to take a decision whether they enter now, they will accept a full stop loss below lows or whatever they put the stop. But the point is that you don't have to worry about this when you have a free risk trade already in your belt. You just let the market move and do whatever it has to do. And as you can see here, the market went, this was a red bar, and then eventually, the market started moving higher again. And that's the kind of and these are the kind of moves that we want to have. We want to be patient and try to go for the 300 pips, and that's the target again that I have for you there. Entry at 65.50, exit at 68.50. Okay, it's 300 pips there. I hope this. I hope Mishari was Todd who asked for the New Zealand dollar, US dollar. I hope that that clarifies. Hi, Pakai, Craig, we have there. Joe, all this time I was straining my eyes unnecessarily. Judy, thanks for asking. Okay, Joe, so that's something that probably we have to, I'll ask Desi to include that in the description when we make the introduction at the very beginning, so you know that you can change the definition on your YouTube videos. So we have also Prakash, welcome. Pound versus New Zealand dollar, please. Absolutely, Michelle, is going to be the next one. At what point you move to a risk-free position? I never move to a risk-free position. I wait for a risk-free position. I never, Joe. I mean that question shows me that I was not clear in in defining the risk-free position. Risk-free position is not a trailing stop. Okay, let me clarify this, and I want you to see my screen to clarify these concepts here. So a risk-free trade is not a trailing stop. I don't move the stop. Indeed, I never move my stop. A free risk trade is taking half of the position out. All right. So if you're trading, let's say 40K worth of euro dollar, or you're trading 100K worth of euro dollar, as soon as price gets to the free risk trade level, you remove 50K of your position. So you actually halve your position. So it's not a trailing stop, but it is what it is. It's a removing part of the position, and you don't have to worry about it. See, if it was a trailing stop and I was moving my stop higher, this move here would have stopped me out, right? And that's not what I want. What I want is that I want to leave the market do whatever it has to do, right, and bring me to target. And I don't care if I bring half of the position to target, because I'm interested in this kind of moves. I'm not interested in taking 10 pips here, 15 pips there, and 50 pips here. I mean, there are people who advocate for 10 pips a day. With 10 pips a day, I mean, you go broke if you consider the time you spend in trading, the cost of trading, uh, and the correct use of capital as well. So I have to be very, very clear about that. All right. So you're very welcome, Todd. So let's look into the pound versus New Zealand dollar, and Mishari has asked, and then we will see. Very well. Very well, Joe. That's the secret, if you wish. Uh, I'm glad that that was clear to you. So pound versus New Zealand dollar next, and now before I get into that, let me do a check here. We still have plenty of time, so there's no problem. I just want to review the Australian dollar, New Zealand dollar, which is one of the market I follow. This is a pure Asian play. I should say Australasian play, if you wish. And this market has been really a pain in the neck recently, because it's actually moving laterally on below. Well, it's moved laterally within a lateral move, which is the worst you can get actually. And as you can see, as we mentioned last week, once we saw this price moving into the lows here, we got that move higher, and again that move higher has broken the back of the shorts here, and so probably going to see this market moving in extensions again back into 109.63. So no reason to remove this trade. I mean, it's a total mess in terms of, does not respect in this specific phase. It's not respecting moves. If you are in a long, keep your long into 109.60. That would be my suggestion there. But it's really a difficult market to trade there, and I'm thinking seriously of at least for the time being to for now to remove it. All right, so we had then the what we spoke about. We said pound. So let me go back to this. We said pound versus New Zealand dollar. All right. So pound versus New Zealand dollar. Let me see if I have it here. I don't. So I will analyze it in here. pound versus the other. As you see, I don't follow all the market, but sometimes what happens is that when I review markets for other people, I mean, I tend to discover opportunities here and there. So this market is trading in a short, but very close on top of a potential area of support. So this market is ending its shorts in a way, if we can use that that expression. It has gapped lower here, went to trade highs, and then it was rejected, as we can see here from the daily. And it was rejected at lower level here. So this market is trading, definitely seems to me that not even that level. So I don't follow this level, so I'm doing a simple analysis here. Probably we need to go to the smaller time frame to see what's going on. But before we get there, from the larger time frame, we see that this market is continuing in its correction into this level, the 2.1390 area here. And it's very close. 1470, 1480 is gonna this market is gonna move 90 pips, I believe, between today and tomorrow into the level. And now we will need to look at how that level is going to be tested. Now, as you can see here, this market has opened lower with a gap low, tried to make it on the and then it was rejected again. So there is clearly participation from shorting this level in this market. 215.86 to 15.68 was a big urgency in selling this market, and it doesn't give me any edge at this stage. What I know is that this market eventually is going to move into that 213.90 that I showed you before. How it's going to do that? No edge for that. So if we don't know how a market is going to move into the level, we have no possibility to manage risk. And so now the trade becomes very risky. So that's what I see in that market. Mishari, it's actually not very technical at this stage, so I wouldn't spend my time and hard-earned money and try to do risk management on something that might not be working easily. Euro and New Zealand dollar needs to come down. Well, I mean, if they will, FX ambassador will be there, we will have protected our capital, but that's not what the market is suggesting, and you should be very careful. New Zealand dollar has traded longs, and it has traded longs last week, and whether you like it or not, whether I like it or not, that's what the way algos are trading this market is suggesting us. And again, today lower prices have been rejected so far. You see that little hammer there, and so this market is continuing higher. On the euro dollar, I'm open to anything, and but this market has been retested twice. So believing that this market has to go down just because we believe that it has to go down, right? After, let me show the euro dollar here. After, this level has been tested twice, it's not that does not bode well, does not help, because this market had all the opportunity to go down, right? It had the first time the opportunity to go down. the bulls have picked that up at the level where we're looking for. And then again on Friday, this market has had another opportunity to go down, and the level was rejected. So we have to be very, very careful. Indeed, I believe this market is going to go up. And now, if again, if that's not the level where the market is going to go up, we have a lower level where that can happen, and we are happy to trade any of these levels, because whenever we have a free trade, we have the privilege and the benefit of letting the market do whatever it has to do. All right, so I'm not sure this market is going to go down from here. I know that if it goes down and gets here, that's going to be even a better opportunity to go long this market. Now, one reason one could say and think that is because we might be seeing a reaction in the US dollar Japanese yen, and we know that the two markets usually do not trade in unison. They do not trade together. They tend to trade one against the other. But this is not yet confirmed, and even though very often we see one market trading laterally while the other market is doing its correction. And so we have always to stay very, very open in relation to what can happen in the markets, because anything can happen in the markets. Look at the open, at the gap down that we saw here in the pound versus the US dollar. So we cannot anticipate anything, and we have to be careful as well. Those kind of moves can produce losses, of course, which are a multiple of the of your risk amount. So it's always very, very important to make sure that you take your trades on top of levels that are significant, because whenever you get a gap down or up, price tends to stop at those level of significance. So that's something that I observed a lot, actually. All right. So, and we're seeing here, okay, Joe, so now you understand the concept of risk-free trade. That's very important. FX ambassador, I don't like Kiwi and Aussie. On Aussie, I would actually agree with you, FX ambassador, because the market is not very, very technical. It's not offering us ways to actually try to trade it in a way that we can manage risk. But Kiwi, as I mentioned and as I showed you, that market is moving higher. Let's have a quick look. If you don't have any other questions, I see no questions there. Mishari, you're very welcome. So if I jumped, or I think I have to review the pound versus US dollar, because I've been asked to do that last week, and I said I would do it I think on Thursday, and I said that I would do it this week. So by no means I have to keep my promises. And let's review the pound versus US dollar and see what it is doing on the weekly time frame, and then on a smaller time frame there. Okay, and this market has actually traded some levels here, and this market has traded the old way halfway back from recent. I have to remove this setting here, so bear with me here. So we saw this market trading shorts, right? And then we had participation on the weekly, and then we had a confirmation when the market came to trade again the shorts. And so This puts this market, as we mentioned last week or 2 weeks ago, to that 139.40. That's where the market is going. And it capped lower here, but it had already identified the highs last week. Okay, and those highs are a high to low here for a continuation lower. Okay, and that high to low as targets below that level. So this inner or smaller move here is pushing price lower into that 139.40. Okay, so that's where we could see a potential bounce in this market. All right, and we know also that pound and euro dollar also tend to trade together, so this would add to FX ambassador point of seeing the euro dollar lower. However, I tend to respect always the levels and get a fee risk level from the FibStalker levels. That's my whole objective and job in my trading, because I don't know what the market can do, and so try to anticipate the market. It's not the game I want to play. What I want to play is knowing what are the area where there is a potential participation, knowing the targets that are involved by this level of participation, and then obtain a fee risk trade at those levels. So can you see the mind shift that I did in the past when looking at the markets, going from the need of being right and the need of making money, which is not really a need, it's an objective, because we don't need to make money. We decide to make money. It's an objective. So it's an important mind shift. If you're capable of doing that mind shift, right, the way you look at price is going to change dramatically. And you don't have to be right. I don't have to be right. We don't have to be right. And I don't want to be right, because when I try to do that, I'm trying to, when we're trying to be right, we're trying to impose our will on the markets, and it's very, very dangerous thing that you want to avoid. Actually, we don't want to impose any of our will on the market, because we know that when we do that, we are doing dangerous assumptions about the market. Do you have permission to share an H4 time frame for DAX here? I know that at least Punk would very appreciate it. Go ahead, Pantelis, for this time. Never mind, I don't see Punk being still around. Okay, so that's something that you can send to him by email then. All right, so let's make a quick time check. Remember that FX Street is actually called for its mission to provide the best webinars in the world, a number of new trading experts. So I want to share that. If you don't have your subscription to the best webinar in the world of Forex, you should get that. I also want to remind you that I'll have a special edition of my FibStalker Methods coaching program starting in May. I'm already enrolling students, and this program is in 3 phases. The first phase is self-study. The second phase is a review of the material with me online in 14 webinars. And of course, we keep applying the concept that you learn to the current markets. And then there is a third part, which is consolidation, which I show you how to reach proficiency, profitability, and consistency in applying the FibStalker methods. All right, so if you're interested, by no means, let me know, and we will, and I'll be very happy to help you conquering conquering the market. So I will start a quick review and a recap of this section of this session right now, and we actually had a look at all the main markets we follow. We mentioned euro, Canadian dollar, which is moving lower into the old halfway back from highs to recent lows on the daily. We reviewed the euro dollar, and we mentioned that the 110.80 is an important level. It was tested twice, and we anticipate this market continuing higher. If this market loses to 110.06, we're going to see a test of 109.59. Is this a short? No, this is not a short. This is a long. And then I mentioned again the US dollar, Canadian dollar. For those who are new to the room, you should know that we traded this market around the lows here when the FibStalker timing gave a signal. This market is on top of a large weekly level long, and I have a belief that this market can reach the 158 level. At this moment, this market is still retesting lows here. It's finding, it's actually processing all the shorts that still believe that this market can go lower. If this market breaks the lows here, I have two trades, and that would be risk-free. They are risk-free. So if I'm stopped out here, it would be a break-even plus cost of trading. If the market loses the 135.47, the overview for this market changed completely. The Euro Australian dollar, same story as the Euro Canadian. It's testing the 153.19. And then we looked at US dollar Japanese yen. Of course, I could have started here a reaction higher. If this market continues lower, it's not going to offer easy opportunity to get involved. So I hope that this market will move into 116.36. Of course, hope is not a good strategy when it comes to trading. It's a good strategy for life, but it's not a good strategy for trading. So if the market will not get there and will continue lower, we will need to find ways to trade this market and its continuation into 170 in a different ways. We also reviewed the Australian dollar US dollar, which is totally uncoordinated markets, like a puppet that is moving without coordination. And so when that happens and the market is not technical, goes from being very technical to not being technical at all, I tend to stay away and wait that the market actually finds its way. We also look at the Australian dollar Japanese yen, which is trading very similarly to the New Zealand dollar US dollar here, with 80 level here that has traded, with the potential of bringing this price higher into 83.60 and potentially 85.40. And the New Zealand dollar, similar story here. Both of these two markets, Australian dollar Japanese yen and New Zealand dollar US dollar, have participation on the weekly. This market have traded 65.50, and this market has the potential to move into 68.45. Okay, so it's 9. Before we stop here, I just want to have a quick look at the US SP 500 here, that is moving now in extension long. So this market has the potential to go above 1992 here. The extension long has come into play. Sorry, that's not the one. The extension that has come into play is the higher level here. It has come into play on Friday, and now the market is following up with better level on the 4-hour time frame, and this market is being pushed higher, and we will see whether this move is going to continue or not. I believe that eventually, given how the US dollar Japanese yen is behaving, this market will reverse and break the 1800 level. Gold and silver will trade let's say in the opposite direction as the SP 500. So at the moment they are correcting lower as the SP 500 is correcting higher. All right, so this is it for today. I hope you enjoyed this session. If you want more, you can join us every day from Sunday to Thursday. Tomorrow I'll be flying, so there'll be no. I'll be flying back to Toronto. There would be no room tomorrow, but please come back and be with me on Tuesday, and you will keep reviewing these markets and finding good 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 entries. When you're sharing some details at the end of this session, G, actually, if I still have time, let me check with. I will gladly do that. Let me see if I still have time. I will definitely do that. Let me ask. And I just wanted to very quickly do that. So until I'm not stopped, I will continue. Thanks for reminding me that, Peter. So let me look at the presentation there. That's some material that I've actually prepared for tomorrow presentation, just in case I get some questions on performance, because it's when you do some claims, then you have to substantiate them. And so as I mentioned at the beginning, let me share this. As I mentioned at the beginning, I have put myself in the same situation as I would be if I participated to one of the most prestigious competition in Forex. Now, what I did, I funded an account with real money, and as I wanted to, and as I had to, and I wanted to create the FibStalker console, which is actually I wanted to create or reproduce the automation I had in other platforms that I cannot use in Canada because they're not regulated in Canada. So I decided to open an account with Pepperstone on I use CTrader. So this after and I funded an account with 10,000, and I've been using the intraday system on this account, but I have not done this alone. So I have I've done this in my trading room with the 27 witnesses, and this I'm going to share very quickly the results here. I don't know if you can see this. The account is a live account on Pepperstone, and by the way, Pepperstone has agreed to send the statement that I will have in the first 3 months of this year to anyone who wants to request for it by email. And at the moment, this account is at 13,950. So I started from 10,000 here at the beginning of the year, and we started on January the 4th. And this is the equity curve. There were very good trades. There were also trades that I was not able to take advantage of, like a trade on the Australian dollar Japanese yen short that I mismanaged because I just started with CTrader. And then there were some down-sloping period in which I was timing. And then this was the trade on the US dollar Japanese yen that we saw that we saw also. I mentioned also an FS Street room, and again we are sloping down here, waiting for the next opportunities, and we have some position open. So this is not to brag, but just to say that these levels actually work, and one thing is to teach and mentor something, another thing is to do it. And I decided to do this together with my students. This is the last part of the statement. And now this is the nice part of it. And again, it's not to brag, but you have to have some benchmarks as well. And I put myself in the same situation if I was participating to the World Cup Trading Championship. And these are the results that you see there through February 18, 2016. So we have Wenchen Zhang, 18.3%, FibStalker, 39.5%. And I can say that I put myself in the same situation that these guys here are, because I've been trading this live with my students. So I had someone who was actually keeping me accountable. So just wanted to share this with you guys, not to brag, but to say that trading using the risk-free trades and looking at levels of traded by algorithms, it's real, and it's something that can provide an edge. If it was not, I would not have been invited to talk at the New York Traders Expo tomorrow, and I'm going to, if asked, I'm going to show these results that I've shared with you. So I hope you appreciate the honesty and openness and accountability, and that's the way I like to do things. And I want to thank you for coming here today. Thank you, Mishari, Jax, very welcome. Kairn, Prakash, thank you, Peter. Peter's having an elephant memory. That's okay. I promised it. I just didn't know whether I had time to do it. I have a live training room. It's only for my students, though. Kairn. There is an option called C-Mirror in C-Trader that you can provide things. I know that very, very well, and I might decide to do that in the future. All right. Thanks a lot, Peter. The show, as I mentioned to you at the beginning of this video, I gave you the link, and you can review that. Tomorrow I'm going to present my FibStalker console as well, but I will talk about that more maybe in the future. All right, thank you very much, everyone. I hope you enjoyed the show, and if you enjoyed the show, please, what I ask you is tweet it online, tell some friends, and let's make this show grow. I think it's in the interest of everyone, because the more participation, the more question, and the better analysis, and the deeper analysis you are able to do. So thanks a lot for being here. And if you want to watch the presentation tomorrow, go at the very beginning of this presentation, go back and watch it, and I shared how to join the Trader Expo virtual events, and you can get and watch me live in the presentation tomorrow. All right, thank you very much, and have a great one. Bye-bye now. See you on Tuesday at 8 p.m. EST. All right, thanks a lot. Thank you very much, Pantelis. I mean, I hope for the best as well. Thank you. Bye-bye now.